Really exciting things have been happening the past 2 weeks. The XRP ETFs have all been going live like dominoes, one by one. They're falling over. There's still more to go, but we've got 4 XRP ETFs that have all launched in the past 2 weeks. 2 of them launched this week, so all of this stuff is very fresh. In this video, we're going to be breaking down some of the analytics behind these ETFs to evaluate how they're performing and where I think all of this is going to go. Before I dive into the analysis, I do want to do a brief overview of where we started and why the ETFs are so important. If you're already up to speed on these details, feel free to use the timestamps below to jump straight into the ETF analysis. If you're unfamiliar with what ETF stands for, it's an exchange traded fund. Basically what this means is it trades side by side on the stock market with other stocks and even mutual funds. Now, if you're just tuning in and you're fresh to cryptocurrencies, the first spot ETF for Bitcoin launched last January in 2024. The Ethereum spot ETF launched shortly after that, and now we're going to experience a flood of ETFs coming out, not just for XRP, which there's going to be many of, by the way, but other tokens as well, like Solana and HBAR. If you were ever curious about which coins are the best ones to be buying, a really good metric is checking to see which ones have ETFs assigned to them, because these ETFs are a good indicator of which coins are going to be institutionally adopted and which ones are not. In the cryptocurrency space, there are a lot of meme coins. Meme coins is kind of seen as gambling, or they're like penny stocks. We don't really want to be messing with those. We want the institutionally adopted coins, and the ETFs is going to be a very big indicator that those coins will be selected. Bitcoin was first, Ethereum was second, now XRP is next, with 4 of them having launched in the past 2 weeks, and we've got plenty more on the way. Now, there's 2 types of ETFs out there, and it's really important to understand the difference. There are spot ETFs and there are futures ETFs. Futures ETFs are a little bit interesting in that they don't actually have to buy the underlying asset. It's more like a price prediction, and as the name suggests, you're investing on a future market. We don't necessarily care about that, especially in XRP's case, where the number one thing that we're looking at is supply. The most important of the 2 ETFs, it's going to be spot ETFs. The reason a spot ETF is so important is because it is required to buy the underlying asset. In the XRP space, we have 100 billion tokens available. Every time someone buys into one of these XRP ETFs, those ETFs are required to go out and get that asset no matter what the price is. So that means that as people dollar cost average into the ETFs, it's going to chew up a lot of the supply. This is the most crucial detail that a lot of people are overlooking when it comes to the ETFs. There's a lot of great things that we can say about the ETFs. First and foremost, it's going to add a lot of credibility to the cryptocurrency space. You and I might be perfectly fine with going to the exchanges, buying tokens, and putting them on cold wallets. But a vast majority of the global population, they don't really want to be getting involved in that. It's either too complicated, confusing, or they may not trust themselves with that level of responsibility. Personally, I'd love it if everybody did, but we know that's never going to be entirely feasible. It's not realistic. There is a market for people that just want to have somebody else manage the money and they can set it and forget it. That's where the ETFs become very important. It adds credibility to the crypto market space when you can go on to an exchange and see cryptocurrencies being traded right next to the tickers like Nvidia, Apple, and Microsoft. We can't underlook the amount of visibility this gives the cryptocurrency space, especially when you only have a few tokens that are being traded on these stock exchanges. As of right now, it's just Bitcoin, Ethereum, and XRP. Down the road, we'll see HBAR and Solana, but right now, there's only 3. It's a very big deal. When Wall Street and the banks start taking cryptocurrency seriously, it's all going to be downstream to the people that are investing in them. Most people wait for an authoritative figure to say that something is okay before they get involved in it. Just by seeing an XRP ticker alone, when you go into the NYSE, that is what is going to tell your average investor this is now a safe option to be buying. But truth be told, that's not actually the main thing that I'm concerned with. The big deal for XRP, especially XRP, is supply. So we know that there's only 100 billion XRP tokens that could ever possibly exist. 65 billion of them are currently in circulation. The other 35 billion are locked away in escrow. Each month, a small amount of XRP is released into the market. Some of it stays, some of it goes back in. Ripple, the creator of XRP, has control over this escrow To a marginal degree, they do have to release the tokens, but they do have the optionality to send them back in as well. This helps control the available supply, and it also helps stabilize the price. Some people don't like this, but if you're a long-time holder, you understand that this is a feature. In order for institutions to adopt XRP, it does need to have a stable price, and the escrow is the tool that allows them to do that so that we don't end up with a runaway train scenario going in either direction, up or below. Even without the ETFs, the available supply for XRP has been continuously shrinking. Every day the exchanges are getting smaller in balance, and we can follow that along by using the XRP rich list, which is a great tool, by the way. I've made a video previously covering that if you'd like to check it out. I'll link it at the end of this video. As the available supply gets dried up, the token itself has no choice but to increase in price as a response. The ETFs are the major vehicle for causing this supply crunch. Not only did each ETF that launched this week and last week start out with very large volumes of initial purchases, the way ETFs generally tend to work is those that are buying into ETFs tend to dollar cost average into them. In an ETF, unlike a normal stock or a normal cryptocurrency, it's not very attractive to day traders. And in some cases, to even get access to certain ETFs, you have to buy in with a minimum buy-in, and then that ETF gets managed by an actual portfolio manager. You can ask to get your money back or pull out at any time, but you're not going to be able to tell them to start trading on the daily market. This means that people buying XRP in an ETF are going to be in it for the long haul, which is something that we really like, because that means that that supply is getting locked away. Just because there's 65 billion tokens in circulation doesn't mean that there's 65 billion tokens available to buy. If you're holding and you're not selling, that's not part of the circulating market. We may be down to a couple billion or even less, a couple 100 million available XRP for people that actually purchase freely on exchanges, meaning those tokens are available to buy. The ETFs are going to continuously hammer into those, forcing the price to go up, and then we can see if that matches up with the escrow. Do these ETFs continually suck away all of the available XRP that gets released monthly? If yes, this is going to be what we're really looking for, and it's going to be the thing that causes XRP's price to dramatically increase. And when I say increase, I don't mean going up a few cents or 10, 20 cents. I mean it could actually multiply upon itself. Now, just as a disclaimer, this video is just for education and entertainment purposes only. I'm not a licensed financial advisor. So it's always best practice to meet with someone who is a licensed professional, talk about your wealth management goals, and do your own research before buying. With that, I strongly do believe the price is going to be rapidly increasing, probably within the next 3 to 6 months. Now, the ETFs themselves are not going to do all the work in one day. It's kind of like buying balloons. You don't get a balloon and just have it immediately inflated. You do have to pump air into it. And just like we're seeing with these ETFs, the air is getting pumped in. I'm really keen to look at the mid-January to early March timeframe of Q1. It's going to take time for these ETFs to fill up, but I think that once the inflows are in, we're going to be able to see a pretty predictable pattern that lets us know, are these really doing the job at burning up a lot of that available supply? So far, I think we can say the answer is yes, just on weeks 1 and 2 alone. But we're going to jump into that and see, does it really hold up? Before I jump into the analysis, I would like to hear from you guys. This is a new channel and it's been growing a little bit faster than I initially expected. Not that I'm complaining, but some of the background is a little bare. I've been making some visual upgrades. I'd love to get your feedback. Do you like the overall aesthetic of this channel? Let me know. It helps me know what I need to do and what things I need to change in order to improve the channel. And as always, if you haven't subscribed yet and you are enjoying this content, now would be the perfect time to hit the subscribe button. With that said, we're now going to look one by one at the ETFs, see how they did, and kind of break things down. So we're going to start digging into the analysis here. By the way, if you want to be able to look into this yourself, I'm on ETF.com, which you can look up any ETF on and see the inflows. I'm on the Fund Flows tab here. And then I also have coinmarketcap.com. I use both of these sites to do a lot of my analysis. So right now, XRP is trading at around $2.21. And the rest of these ETFs, you're going to notice a lot of them are, for the most part, the same price, right? So the Bitwise XRP ETF, which, by the way, they got the ticker XRP, which props to them. That's awesome. It kind of tells me that some of this stuff has got to have been cooking for quite a while. I'm not really sure how they were able to lock down that ticker. But good for them. That's completely awesome. We can see it's trading at around 24.92. If we look at the other ones, they're pretty much lockstep in terms of price. Canary's XRP ETF is at 23.7. Franklin Templeton's at 24.18. And then Grayscale is at 43. So I don't know exactly how they're bundling these up, but it is a price match. It could be that one share of any one of these ETFs could be getting you a bundle of XRP. I tend to think that, just going off the simple math here, if the Bitwise is trading at around $25, and we know that XRP's current trading price over here, if we know the current trading price over here is $2.21, it leads me to think that again, someone would have to correct me if I'm wrong on this, but I'm pretty sure you're probably getting about 12 tokens of XRP every time you buy one share of the Bitwise XRP ETF. Again, I'm happy to be corrected if I'm wrong on that, but that's kind of how I interpret that. These prices aren't entirely locked up one-to-one, so I'm not entirely sure if I'm right on that, but it would make sense to me. So we've got 4 ETFs that have all launched. Let's go ahead and look at all of the inflows. Starting out with the Canary ETF, this one was first, so we have the most data to go on. We can see on launch day it did very well. $245 million of inflows. If you think about that, at the time that this was trading, XRP's at maybe $2.10. We're looking at about 100, maybe 120 million XRP that got locked up that day, November 14th of 2025. Now, if we look through, each day the numbers are a lot smaller. This is to be expected. It was a launch day, so you have to imagine there was a lot of money waiting to get in on the 14th. You're not going to see that on a daily volume, but we're seeing right here the very next day, 27 million. The day after that, 8 million, 17 million on the 19th, 13 million on the 20th. So since this launch, we're looking between 10, 15 million in daily flows just for the Canary XRP ETF alone. The second one to come out, and by the way, it did the second best as well, it's going to be the Bitwise ETF. This is the one that has the XRP ticker. That's awesome. Day one, it did 105 million. That was just last Friday. I'm filming this on Wednesday, November 26th. So this is only about 3 days old. We've got about 3 days of data here. You can see the next following day, it did about 11 million. And let's make sure I'm not covering the screen here. By the way, I'm kind of new to this stuff still, so be patient with me if the screen doesn't always look right. It's a work in progress. We'll get there over time. We're looking at just shy of 20 million yesterday. So between these two ETFs, we're already looking at combined inflow. You got 134 from Bitwise, 332 from Canary. Let's just call that 500 million. In the very first week of these two XRP ETFs being live, they've done $500 million of inflow. We still have more to go. And the next one I'm really excited about here is Franklin Templeton. This one really excites me for very specific reasons. I'm going to jump into that here in a second, but I just kind of want to show off some of the net flows before we do. Day one, this launched yesterday on the 25th. And we've already got $62 million in inflows. Now, why do I like Franklin Templeton? I'm going to give you guys a very specific reason why. Franklin Templeton is already a very well-respected firm. It really specializes in high net worth clientele that want to be putting large amounts of money into actively managed portfolios. This means a couple of different things. First and foremost, there's a lot of old money in Franklin Templeton. Think about the types of people that are hanging out in Nantucket in the summer times and they're in Park City or Vail in the winter times. They've got a lot of money to blow and they don't necessarily want to manage their own money. So they go to a portfolio manager. They say, here's here's $10 million. I trust you. Do your thing. Grow this money for me. I'll call you in 6 months. So that's basically what Franklin Templeton is. Just to even get involved with Franklin Templeton, a lot of their funds have a minimum buy-in. On the low end, it's around $50,000. On the high end, it can be up to $250,000. I know this from experience because previously this year, I actually was laid off myself from a company that I had been at for over 10 years. I had a large sum in my 401k. I had the opportunity to roll it out of Fidelity and into a Schwab account. I was able to get invested in one of Franklin Templeton's portfolio managed funds, there was a $50,000 buy-in. So I know myself, I've experienced how all of this works. This is the kind of stuff that has me salivating at the mouth like a rabid dog, thinking about big money and how they're going to be invested in XRP, because the buyers aren't going to be daily managing their portfolios. They're trusting someone else to manage it for them. In an XRP ETF like this, it's not going to get regularly traded, but it's going to have a tremendous amount of inflows from old money. Think about the types of people that aren't going to really care that much about cryptocurrency as a technology, but they do care about the upsides of money. It's going to be a lot of like the boomer generation, older people, 60s, 70s. That's where a lot of money resides currently, and having them invest in XRP, it's going to go a long way at getting that supply crunch that has me so excited, because the catalyst for tremendous growth with XRP in particular, it's all about that supply crunch. There are events that happen after that, which I'll cover off in different videos, but to keep it high level, there is something called a domino theory. And the idea is that once there's a supply crunch, this would be step one. The price appreciation that you get from a supply crunch, it's going to make XRP attractive enough for institutions to actually start using it for settlement. That's where things really start to take off. Again, this is all conjecture. None of this has actually played out yet, but this is how the domino theory expects things to happen. After we see the first leg of institutional adoption, we're expecting there to be some sort of liquidity crisis that causes a lot of the fiat currency in circulation today to be converted into cryptocurrencies. That would mean that not only do the institutions start settling with XRP, but now there'd be a lot of fiat money being pulled out of the market and being put into the cryptocurrency market, increasing those total market caps by trillions of dollars. Right now, the total market cap for cryptocurrency is sitting at around 4 trillion. This event could send it to 20, 30, 40, maybe even 50 trillion over the next 5 to 10 years. And that's not new money we're talking about. That's going to be a currency transfer. That's money coming out of fiat and moving into crypto. So a lot of people miss that element to it. It's not like there's just going to be $50 trillion that appear out of thin air. It's going to be a conversion. That's why has so many of us in the XRP community foaming at the mouth like a rabid dog, thinking about these crazy numbers. It's because mathematically it all makes sense. It just has to play out. And step one is the supply crunch. And we're going to be seeing that with the ETFs. Now, last but not least, let's cover off the Grayscale ETF. All right, here we go. The last one, GXRP. This is going to be Grayscale. Very similar results to Franklin Templeton. We've got 67 million. It all went live yesterday, just like Franklin Templeton's did. So if you think about the two of them, they did a combined total of about 125 million in their opening days. Compare that with the Canary and Bitwise XRP ETFs. We're looking at around $650 million of inflows just in the first week and a half. Here's where I think things play out from here. And by the way, let's just look at XRP's coin market cap one more time, just so that we're all on the same page. As of right now, XRP is trading at exactly $2.22. When this supply crunch hits, we can see that figure multiply upon itself multiple times. The amount of inflows going into XRP, it can't stay at these prices forever when you're getting $500 million in inflows from these ETFs just in 1 week alone. I would imagine once we have about 7 or 8 XRP ETFs, each of them doing about $10 million a day, it's only a matter of time before we see those really eat away at the available XRP. It can't stay at 220 forever. As I stated earlier in the video, I'm really looking at that mid-January to mid-March timeframe. I really want to see how do things play out in between those 60 days. I still think November is a little bit too early for us to see where the price goes from the supply crunch. I think December is probably going to be a bit too early as well. I'm thinking by January 1st, we probably see around $2 billion total in inflows going into XRP, which is really going to reduce the available supply, especially going into 2026. When this starts hitting the mainstream investment networks and you've got someone like Jim Cramer advertising people to put 1 to 5% of their allocation towards a crypto ETF, and there happens to be 8 of them in XRP. A lot of people will pick XRP just because it's just a law of large numbers. They're going to see a whole bunch of XRP ETFs available. They'll pick one and throw it in. It's going to leave Bitcoin and Ethereum in the dust. That's in my opinion. This will get us that much closer to realizing step 1 of the domino theory, which is that supply crunch. If the XRP price makes it somewhere out into the 20s, maybe the 30s, that's at the level where the institutions can finally start using it for small cap settlements. The price is still very insignificant in the grand scheme of things. It needs to be in the multiple hundreds or even the thousands to be managing the entire global supply of transactions. It's not going to happen in one day. As much as I would love for it to, we'd all be millionaires tomorrow. It'd be fantastic. This does have to happen in small bites. The networks need to be tested. The institutions need to see that it works. But we're building out that framework day by day, week by week. I think 2030 is going to get here a lot faster than people think it will. And that's when I think this really starts to get out of control. We'll have a runaway train scenario. I just don't think it happens in the immediate future. So you still got plenty of time to load up on XRP, start dollar cost averaging into it. Maybe look at some other companion tokens as well, like HBAR or Flare or XLM, Chainlink, Ondo. Just to be well diversified, some of these other coins are going to get picked up in institutional adoption as well. I don't see any problem with having a robust portfolio and trying out a few different tokens to see where things land. Well, I'm going to cap things off here. If you want to know more about the XRP rich list, that's going to come up immediately after this video is over. And if you want to support the channel, you can do so by leaving a like, a comment. Subscribing is very helpful, but the number one thing that helps above all other things is sharing the video. Send this to someone that you also know is into cryptocurrencies. If you want to support the channel, that's going to be the way to do it. In the meantime, I've been Andrew Fillion. Have a happy Thanksgiving, and I'll see you guys after the holidays. Take care.